Welcome back to 3-Star Swap. I am absolutely thrilled to have you here for this explainer today because we are tackling a hard truth that almost no one wants to admit. You see, scaling a trading account, it actually requires scaling your mindset first. The market, it doesn't care about your bills, it doesn't care about your dreams, and it certainly doesn't care about your need to prove yourself. It literally only cares about probability and discipline. While most people out there are desperately hunting for some magical holy grail indicator, the top 1% are mastering the person in the mirror. So let's dive into the advanced psychological framework you absolutely need to protect a small account and grow it into a legacy. This is the discipline mindset for scaling small capital.
Okay, let's dive into this. The great trading illusion. You know, most amateur traders step into the market driven purely by dreams of quick wealth rather than a focus on probabilities. When you come in with, say, a few $100s, there's often this super dangerous illusion that you can just flip it into millions overnight. You kind of start viewing the market like a lottery ticket rather than a serious, disciplined business. And that mindset right there, that is exactly how small accounts get completely wiped out before they even have a fighting chance to grow.
So here is our masterclass roadmap for this explainer. We're going to cover number 1, the small capital trap. 2, survival before growth. 3, the pre-trade routine. 4, mastering the mid-trade. 5, the post-trade reality check. And finally, number 6, becoming a money magnet.
All right, let's start with section 1, the small capital trap, and exactly why shortcuts destroy accounts.
Now, what's really interesting is the clear contrast in how we approach the unknown. Beginners are constantly trying to predict the future. They want certainty, right? They think if their analysis is absolutely perfect, the trade literally must be a winner. But professionals, they treat every single trade like a coin toss. They know the market only offers possibilities, no guarantees. A pro knows that over a series of, say, 100 disciplined trades, their edge is going to play out. They aren't rattled by a single loss because they're trading probabilities, not predictions.
And this brings us right to the shortcut trap. Look, it's incredibly tempting to just buy a course, copy some guru's strategy, and think you're going to magically get their results. But jumping between strategies, it's like digging shallow 20-foot holes all over a massive field looking for water. You exhaust your energy, your time, and your capital, but you never hit the well. Instead, you need to find one strategy that matches your unique personality and dig deep, because a guru's strategy is never going to give you their emotional discipline.
Moving right along into section 2, survival before growth, the math of the market.
So the crucial point here is the harsh mathematical reality of the market. If you take massive risks and suffer a 50% loss on your account, you don't just need a 50% gain to fix it. No way. You need a 100% return just to get back to zero. Think about that. The math of the market heavily rewards the cautious, not the reckless.
I really want you to visualize this metaphor. Treat every single dollar in your account as a literal soldier in your army. If you risk 20% of your account on a single trade just based on a feeling, you are basically sending your soldiers on a suicide mission. And very quickly, your entire army will vanish. If your capital is gone, the game is over. Period. Survival is the absolute prerequisite for compound growth.
Let's shift gears to section 3, the pre-trade routine, winning before the open.
Now, before you even open a chart, you've got to ask yourself this question. If you wake up and immediately start scrolling through massive profit screenshots on social media, you are triggering greed and FOMO before your day even starts. If you're stressed, if you're angry, or just exhausted, you're going to suffer from fatal decision fatigue. Because if your mind is cluttered, trust me, the charts are going to look cluttered too.
So this is your daily blueprint. Step 1, audit your emotions. Step 2, mark your zones early. And Step 3, define your exact risk. Think of a prepared trader like a firefighter. A normal person runs away from a burning building in a total panic. But a firefighter, they run into that burning building calmly and safely. Why? Because they have a strict, rehearsed plan of action.
I highly recommend you ask yourself this exact question every single morning. It acts as such a powerful filter. It forces that greedy, over-trading part of your brain to just quiet down. And it filters out all those impulsive, action-seeking trades that just slowly bleed small accounts dry.
Okay, now we enter section 4, mastering the mid-trade, where we focus on executing the edge. Let's see how this actually builds across a structured timeline. By securing partial profits and mechanically moving your stop loss to break even once you hit a 1-to-1 reward, you instantly remove that emotional mid-trade panic. You aren't leaving things to chance anymore. You're executing a strictly defined system that literally protects you from yourself. And this is a massive distinction right here. Amateurs will stubbornly remove their stop loss and hold on to a losing trade just to protect their ego. They desperately need to be right. But professionals? They happily accept a small loss. Why? Because they marry price action, not their own opinions. You're here to be profitable, guys, not to win arguments with the market.
Next up is Section 5, the post-trade reality check, or, as I like to call it, the honest teacher.
You've got to log your trades, but not just the profit and loss numbers. You absolutely need to log your emotions. Did fear make you exit early? Did greed make you hold too long? A trading journal that tracks your psychological state acts as your most brutally honest teacher. It simply won't let you lie to yourself about why a trade actually failed.
This is it, the ultimate survival rule. If you hit your loss limit, you hit the kill switch. Close the app, walk away. The market will always be there tomorrow, but your capital absolutely won't be if you let post-trade frustration and ego dictate your next impulsive move. Finally, we reach Section 6, becoming a money magnet, because ultimately, capital follows skill.
And this brilliantly illustrates the ultimate mindset shift. When you stop obsessing over forcing your small account to grow and instead focus purely on making your risk management and accuracy surgically precise, the whole dynamic changes. You build such undeniable character and skill that capital will naturally find you. I mean, investors will literally beg you to trade their capital when you reach that level of mastery.
The chart is just reflecting data, but how you interpret and react to it, that comes entirely from your mind. And to keep that mind sharp, you must have a life purpose outside of the charts. If trading is your entire identity, every single red tick is going to feel like a devastating personal failure. Hobbies, businesses, and relationships outside of trading, they create the ultimate calm, detached mindset you need to succeed.
So I want to leave you with that thought. The market is going to test your character long before it ever rewards your wallet. Are you going to keep searching for shortcuts, or will you commit to the discipline required to scale your mind first? Thank you so much for joining me on this explainer. Take these principles to heart, apply them, and I'll see you in the next one.